How do you get a smooth transaction from application to closing?
Pay cash.
No, I mean with a mortgage involved.
April 1st is almost here. Along with the Easter Bunny comes new FHA guidelines.
Yes, and also we promised you information on that new, banjo.
I think she means harp.
Harp loan coming right up.
Good morning. My name is Ron Morris. This is Moving Forward TV, your local real estate and mortgage update.
And I'm Delynn Gaston. Thanks for joining us. Okay, well, April 1st is around the corner, and the Easter Bunny is not the only thing coming. FHA changes and the guidelines are coming effective April 9th. This is just a heads up. I know we did a whole show on this a couple of weeks ago, but just so that you know, April 9th is just around the corner, and that's the drop dead deadline date. The premiums are going up. So if you are a buyer who is going with an FHA product, make sure you get in your offers right now, and that case number has to be ordered. And if you're a realtor, urge your buyers. Now is the time, because after April 9th, it's going to cost them more money.
It's going to get more expensive, and not only that, on top of that, there's going to be some changes on disputed accounts and collection accounts. Doesn't sound like a big deal. It's going to be a huge deal with a lot of FHA buyers out there. So just kind of keep that in mind. Those changes are coming up after April 9th.
Okay, we promised you information on the new HARP 2 program.
Because it's so improved.
It's just, the HARP 2 is sounding, smelling, tasting an awful lot like HARP 1, isn't it?
Because HARP 1 was so good?
Yeah, so they just decided to repeat it, apparently.
And here are a couple things that they have done. They have changed what we call the DU findings, basically some software to allow these waivers, for lack of a better word, to go into place. For example, the PIW, which is a property inspection waiver, as long as the DU findings indicate that they can waive the appraisal, because that's really what we're talking about.
That's what it comes down to.
Then that would apply. Now, we are seeing lender overlays, surprise, surprise, and some of the loan to values we're seeing are anywhere from 105 to 125, again, sometimes with lender overlays.
The lender overlays, right. For the most part, Fannie Mae is saying, supposedly, oh, okay, well, this program is out there, but the lenders are saying, well, I'm not putting my neck out for that. So actually, Wells Fargo is one of the big ones that came out with this huge thing, a week or so ago, and they said, oh, they're on board, we're on board. Then they retracted it last Friday, I think it was, or something, and said, oh, hang on a second. And now they're back to like 105% maximum.
Which helps nobody.
Which is like less than HARP 1. So 125 is where most of the lenders are. Again, that's back to HARP 1. But there are a couple of lenders out there, and we certainly have some lenders who are basically going by the DU findings. When we submit the loan into Fannie Mae and run the findings, and if the findings come back and say,
basically whatever those findings say, that's what the lender's going to require.
And in some cases, no income as well is coming back. So if again, the key things on this, you have to be on time. The loan has to be before June of 2009, and keep those things in mind. Okay, and finally on today's show, we wanted to touch base on getting a transaction from application to closing as smoothly, quickly, efficiently as possible. When there is a mortgage,
not a cash deal, right?
Not a cash deal. When there is a mortgage involved, you guys know that there's delays that end up happening at the end. We've got some great realtors that we work with, and they are right on their game, man. They are right there saying, "What can I do?"
We're all a team. That really helps.
From the start, right? What can I do? How can I help you get this through? So we figured we'd put some tips together today of the things that you can do for us right up front, help us out with, so that we don't run into any snafus at the end of the transaction.
And probably one of the first ones is in reference to the sales contract. Any mortgage person, we really can't do anything without a copy of the executed sales contract.
Fully executed.
And a couple tips on that. I know I speak from experience recently where we had a name misspelling, and actually we had one where the realtor thought it was a FHA loan. They had checked the FHA addendum block. Come to find out it was not an FHA loan. So we have to kind of get those things corrected. As long as we do early in the transaction, not really a big deal. When it's later in the transaction, it tends to slow things down from time to time.
You know what it is? Underwriters, everybody's looking at everything a lot more careful than they used to, because in the end, on the secondary market, little tiny things are coming back to, kick their behind, the lenders. So they're getting it from, so underwriters are really scrutinizing these things very closely. So if we can do all we can on the upside.
In the beginning
and
of
then
it,
we
right.
won't delay the closing at the last minute. You know, the underwriter finds it, or like Ron said, in the closing department caught the misspelling on the name. Well, that ended up delaying
And it cost
things.
us a day just because of a misspelling. So pay attention to the sales contracts, the spelling, and the boxes that you're checking to. Another thing you want to pay attention to is the survey. Now, most title companies out there will assist in that and take care of that. There are some out there, I've dealt with one recently that flat out refuses to order a survey. That's fine. We just need to know that. We need to communicate with that so we can make sure that's done and not at the last hour.
And you know, we tell people all the time, if there is, you know, if you're a listing agent, ask right away your sellers, do you have a survey? Most of the time, if the survey is within 10 years, the title company will accept that, because it's not so much the lender, it's the title companies whose tail is on the line, more or less, when it comes to that survey. So if there is a survey, you know, when you're taking that listing, get a copy of that survey and we'll see right away. And again, if there isn't, let somebody know ahead of time so we can kind of jump on that early.
And in reference to that, title companies, we need the title company information first thing. As soon as we get the sales contract, we cannot prepare our documentation to meet with a buyer until we have title information. Basically, we need a pre-HUD from the title company. So a name and a phone number of the title company is wonderful. It will really help speed things along. Another thing is the contact for the appraiser. Who is that? Is it the listing realtor? Is there a seller that's still occupying the property? We need to know who the appraiser needs to contact.
You know, and with the appraiser thing, keep in mind, and I have two things that just happened recently. Before the appraiser goes out, go through the house, go through and look for the obvious things. Two things that just happened, and it's a nightmare. Again, the appraisers are being really strict these days, just in general, because, again, they're getting it on the backside.
They're getting scrutinized.
They're getting scrutinized. So one of the things that happened recently was the power was on in the house, but the air conditioning breaker was off. So when the appraiser went out there, the listing agent did not meet him, just, you know, lockbox, and he got inside and he did his whole inspection, and the appraisal report comes through and it says, breaker turned off on air conditioning. Well, it cost a $150 re-inspection fee for the appraiser to go back out there after the listing agent went out there and put the breaker on. Now, of course, we all got really mad and said, oh, geez, you know, Mr. Appraiser, couldn't you just go and turn it on? And no, he couldn't. And I understood it afterward. He said if he flipped that, he didn't know why it was off. Is there something wrong with it? If it started smoking or whatever, it's his liability. So he couldn't do that. Right. The other thing is there was a outside outlet, and there was a faceplate cover that was missing. And
so
you know,
was that 50 cents?
A 50-cent fix. You know, if somebody put a faceplate cover, again, $125 this time
for the appraiser to go back out and re-inspect. For the appraiser to go
back out there and re-inspect. So just look for some really quick, obvious things. Make sure everything's functioning that should be functioning when you know the appraiser's going out there. That's our show this week. Thanks so much for watching. If you are watching for the first time, you can subscribe for free right over here. Forward this show out. This is also our team over here, Commonwealth Insurance, McWilliams & Son, Air Conditioning, Planet Beach, where we can go to get stress-free massages.
And if we can help you with any questions about HARP, HARP 1, HARP 2, I think there's a banjo loan going on or something like that too.
If you have any questions.
Just reach out to us. You can email us. I think our phone number's down below. I think there's that social media stuff going on as well.
Facebook,
just
Twitter,
reach out. Love to hear from you.
We are Today and Every Day.
Moving forward, we'll see everybody next week.
Thanks. Bye-bye.